When combined with our existing collaborations with Roche and CStone, we have the potential to ultimately realize more than $2 billion in total upfront and milestone payments from our partners over GAVRETO's life cycle, achieving significant value for our shareholders. Altogether, this transformational deal fortifies our balance sheet at an exceptionally low cost of capital, amplifies our ability to invest internally and externally, and maintains Blueprint's financial independence. As of the closing of this financing, we will have $575 million fully funded upfront, in addition to the nearly $900 million in cash on our balance sheet as of the end of Q1. Further, we continue to expect $115 to $130 million in net product sales for AYVAKIT for this year. We will provide an update on total revenue guidance, including the impact of this transaction on our Q2 call. From this exceptionally strong financial position, we have the foundation to continue to invest in our ongoing commercial execution for AYVAKIT and GAVRETO, as well as expand our ability to bring the promise of precision therapy to a broad patient population through internal R&D and strategic business development. With that, I'll now turn the call back over to the operator for questions. Operator?
Thank you very much. If anyone would like to ask a question, please press star followed by 1 on your telephone keypad. If you would like to withdraw your question, please press star followed by 2. And when preparing to ask your question, please ensure you are unmuted locally. Please kindly limit yourself to 1 question. Our first question is from Marc Frahm from Cowen. Marc, your line is open. Please go ahead.
Good morning, everybody. This is Ernie Rodriguez for Marc. Congratulations on the deal. Question for us is basically why do the deal now? Is it driven by the need to finance a drug clinical program for the EGFR program or the CDK2, or what sort of prompted the completion of the transaction now?
Yeah, thank you very much for the question. As Mike mentioned, this was a very competitive process, and this deal represents incredibly attractive financing for us as a company with very favorable terms that brings forward significant non-dilutive capital, just creating strategic flexibility and allowing us to drive innovation and growth across the business and in many facets of our business. We certainly are very excited about the opportunities the EGFR and CDK2 programs represent. They're significantly larger market opportunities that are going to warrant additional R&D investment particularly as we move those compounds into first-line treatment settings for large patient populations. And so that is something. These programs are programs we are very excited about, the both investment opportunity and the revenue generating opportunity that sit on the other side. Additionally, just from a strategic perspective, we want to continue to pursue strategic and synergistic business development opportunities, and particularly those that can leverage both our development and commercial infrastructure. And this deal gives us opportunities for financing as we look for high quality assets that could meet those types of criteria. So there was a number of reasons why we did this transaction, and I don't know, Mike, if you have anything else to add to that.
No, I think fundamentally what we were most happy with was how the terms Kate mentioned came out. Is we believe these are, for a deal like this, industry-setting terms in terms of cost of capital, and we needed to seize upon this opportunity to allow us to accelerate, expand our internal investments, and give us that flexibility to further invest in the external environment. And we're very excited about that, and we think this puts us in a tremendous position for years to come.
Well, thank you. In terms of like the result of this deal for your cash flow positivity, do you have new guidance in terms of when will you get to cash flow positivity?
I'll take that, Ernie. It's Mike. We're not providing specific guidance as to when we get to cash flow positivity. As we've said before, even before this financing, we fundamentally believed that we had the cash to take us to an independent financial profile. But what this capital does on the balance sheet now is it fortifies that belief, but also allows us the flexibility to expand, accelerate investments, continue to look on the external innovation on the BD side while retaining, that independent financial profile. So fundamentally, it just puts us in a better spot, and that's what we want to take advantage of.
Yeah, and I just say in this market environment, we have certainly seen that there is a flight to quality, and we believe this transaction is very much an external validation of the growth opportunities at Blueprint and our ability to execute against them.
Thank you. That's helpful. Thanks for taking my questions, and congrats again.
Thank you.
Thank you very much. We will take our next question. Our next question is from Dane Leone from Raymond James. Dane, your line is open. Please go ahead.
Hi, thank you for taking the questions. Just kind of a dumb question as the first part, but has it closed? I was having trouble actually finding the filing with more of the granular details. But in lieu of that, I was just curious if you could maybe explain what you think your cost of capital is for the Sixth Street component, so the $400 million component that's going to be funded at close, and how you calculated that cost of capital relative to either equity financing options or debt financing options. And then could you please comp what you are looking at for the actual terms of the Sixth Street deal? Because what immediately came to mind for me was actually the REGENXBIO deal with Healthcare Royalty Partners, and they had a 1.3 cap, and then if they didn't hit a certain cap by a date, it only went up to 1.5, which does seem a bit lower than the terms that you guys have here today. Thank you.
So maybe I'll start, and then Dane will I'll let Mike kind of address some of the questions specifically. But I think how we look at the financing is, as Mike said, I mean, this was a highly competitive process, and we looked across multiple different transactions. I mean, numerous transactions. We can certainly provide offline that set of comparabilities, but we believe that these are incredibly attractive deals across all aspects of this transaction. And it's really, an opportunity to obtain financing now and converting future revenues to cash, but with a total payback amount that's a very small proportion of expected future sales. And so it allows us to benefit now, particularly from AVA's meaningful sales position in non-advanced SM, in a way that recognizes the overall value of that program that is, frankly, just currently not being recognized in our stock price. And so I think that for us provides that long-term optionality and flexibility. And maybe Mike, do you want to talk about the specifics on close?
Yeah. So in terms of the close, basically the deal is signed as of today, and a portion will close today, and then there's this follow-up portion on the debt financing that will fund in just a matter of days. So fundamentally, it's the transaction is going to be closed. There are no conditions to close. It's just the funding. So mechanically, we'll walk through kind of what the impact is on our financial statements on the Q2 call. But in terms of like the cost of capital, when we look at both comp deals and just look at the components of this, we're really excited about the pieces, right? The debt component, the up to $400 million that we have there. I mean, that's at a rate of the base rate, SOFR rate, plus 6.5%, which we feel in this market is a very attractive cost of capital to us. And then with respect to the royalty monetizations, reference, it's at a 1.45 cap. I'm not going to speak to the specifics of other deals that have been done, but when we look at that in totality, we feel that that's a very attractive rate to us, and it's better than most deals that have been done out in the market. And further, I think what's important is like we're doing it with partners who believe in us for the long term, right? They're not in here just for the transaction itself. They fundamentally believe in what we're trying to build here, and you can see that with the Sixth Street components and the future potential debt to support BD. This is a partnership that we think is going to stick with us for many, many years, and we are very excited by that and that prospect.
Okay. Thanks, guys.
Thank you. Our next question is from Salveen Richter from Goldman Sachs.